Our top story at this moment is the entire row over the Adani FPO, which was withdrawn yesterday. But despite that, the politics around it continues. In fact, yesterday, late at night, after a meeting of its board, the Adani company withdrew its FPO, which had been oversubscribed just a day earlier. Now, the losses are being counted after the Hindenburg shelling. The Adani Group called off its 20,000 crore follow-on public offer. There was a bloodbath on Dalal Street. Losses continue to mount on day two. The 106-page Hindenburg research has left a 100 billion deep hole in the pockets of Adani within the last 6 days. This translates into a loss of 43% for the 10 Adani companies in less than 10 days. The second richest man now stands at number 16 in the list of the world's richest. To give you an idea, let's show you the stocks of the 3 Adani companies and the way that they have fared. Now, on the 25th of January, Adani Enterprises was hovering around 3,400 rupees, but once the Hindenburg report surfaced on the 25th, the share started to fall and continued to slip. As of today, it stands at 1,565. Now let's take a look at Adani Green Energy. It suffered a similar fate. The share was over 1,900 rupees on the 23rd and 24th. But after the Hindenburg report, that share has also slipped down to 1,039 at present. The third share that we are looking at is Adani Ports. It had the same destiny, started at 769 and today stands at about 462. The opposition is alleging that the centre forced financial institutions to invest public money in Adani Group, and there were investments made by LIC in the group even after Hindenburg exploded. The opposition now is saying that a significant volume of public money through SBI and LIC is locked in the Adani Group, which is now in danger.
हमारी मांग ये है कि या तो जॉइंट पार्लियामेंट्री कमेटी बनाओ और इसकी इंक्वायरी करो, या नहीं है तो सुप्रीम कोर्ट के चीफ जस्टिस के नेतृत्व में कमेटी बनाकर इसको इंक्वायरी कराई है और डे टू डे रिपोर्ट बाहर करते जाइए.
My government must explain about the institutional oversight failure. If there was any failure at all, otherwise the government must come and say, no, the institutional oversight was perfect. They must explain that, but the government is only maintaining a silence.
इतनी बड़ी रिपोर्ट सामने आई है, 2 साल की रिसर्च के बाद आई है, जो ओवर प्राइसिंग की बात कर रही है, मार्केट मैनिपुलेशन की बात कर रही है, और उस पर आप संज्ञान नहीं ले रहे हो. ये दुखद है. जिस तरीके से कल पैसा वाइप आउट हुआ है जनता का, ये दुखदाई है.
We are saying the whole thing is morally incorrect, and we want an investigation, proper investigation into what has happened.
भारत के प्रधानमंत्री को सामने आके लोगों की चिंता दूर करनी चाहिए. भारत की वित्त मंत्री को सामने आकर ये बताना चाहिए कि आरबीआई क्या कर रही है, सेबी क्या कर रही है, ईडी क्या कर रही है, सीबीआई क्या कर रही है. इतने बड़े भ्रष्टाचार पर अब तक पूरी सरकार खामोश क्यों है?
At a time when the crony capitalism is ruling the roost in the business cycle and the stock exchanges are being shattered by that, there is a report coming from Hindenburg saying that there is kind of a manipulations, stock manipulations have been done, and many things have been said. We need to probe into that, and actually other probe will not do. I am asking for the joint parliamentary committee to probe that.
Now, some of the big central financial institutions like the LIC and the SBI have invested in the Adani stocks. After the hit, investors are now sizing up the exposure. Let's tell you about some of this exposure. By the way, the exposure of big investors is less than 1%. In terms of percentage, it's actually 0.975%. LIC investment in Adani Group stands at 30,127 crores. About 2.1 lakh crores from public banks have gone into Adani's firm as well. Now public banks have been asked by RBI to calculate their exposure and submit their report. 3.4% of Adani Enterprises is held by Indian mutual funds. Even 3.6% of Adani Green Energy is held by Indian mutual funds. Now here, why the LIC, SBI and even the finance secretaries have rushed in to assure investors that exposure to the Adani Group is limited and that there are adequate safeguards.
Our exposure is to the assets, physical assets, and they are having adequate cash generation, and we have not experienced in the past any kind of a default from this entity, and we don't expect that we will have any challenge because the assets are having very robust cash flows. So as far as our lending is concerned, we don't envisage any problem on this particular account.
I think the exposure to any one company is so small that to connect the fortunes of any one company with those of either LIC or nationalized banks is, I think, not very justified or rational. I think the total exposures are small, and yes, there are always companies that do well and companies that do badly. Institutions spread their investments across a big portfolio, and I think there is less than 1% concentration of any one company at this moment which in the portfolios of any of these financial institutions. So I don't think that's a big enough concern. In fact, I don't think that is a reason for influencing the prices of public sector banks in the days to come.
Its ability to repay a loan depends on the profits, on the cash flows, which the banks believe are sufficient. The valuations is what the markets are looking at. It's not the cash flows, and the cash flows are looked after by the banks.
Okay.
So there's a difference.
All right, so how valid are the fears that are being expressed right now of a complete meltdown and, more importantly, of public money being at risk? Let's speak to the experts on that. Joining us now, J.N. Gupta, former ED of SEBI, Ajay Sharma, senior editor at ET Now, Ajay Dua, former secretary at the Ministry of Commerce. Let me actually start by asking you, Mr. Dua, is it unusual for LIC to invest in companies like Adani?
I don't think so. If we look at the total investment of LIC in all the Adani Group companies put together is under 30,000 crores. And the current valuation of those is about 50,000 crores. No doubt it has come down from 76,000 crores at its peak. So as of now, LIC hasn't suffered any loss except the loss in profits which it had accrued on its holdings. So specifically to your question, I would only say that an exposure of about 1 to 5% in the holding of various companies is not a very uncommon thing for LIC. It has been investing even larger sums in individual and groups of companies or companies of the same group elsewhere as well.
So let me ask you a follow-up on that, sir, because over the last 2 days, all that we have heard is that whoever has bought LIC, unka paisa doob gaya. What you're essentially saying is that even now, LIC has actually made a profit on the money that it put in Adani. So where does it leave us with that argument that all LIC investors are now doomed?
I think doomsayers would say that, but as of now, the LIC is clearly making a profit, and the profit of LIC is profit for its stakeholders, particularly the shareholders, the policy holders. They are well off. After all, on 30,000, if you make 20,000 crores valuation increase, that is 66% increase. I don't think there are too many companies in which LICs would have made this order of profit for its stakeholders.
Interesting. So a lot of the times, fact has to be separated from the politics. Ajay Sharma, is LIC overexposed to Adani?
Hi, Padmaja. Well, if you just put data on the table and you see over 40 lakh crore of asset under management of LIC, we just spoke to Mr. Mohanty of LIC. the current exposure is less than 1%. In fact, they maintain that all the prudent norms of the investment committee while making any investment in any particular group or company have been followed. So I don't understand that why would LIC go and make decisions beyond the investment committee's recommendations, and all the prudent norms have been adhered to. It's not overexposed at all, not even 1%. So they can, by the norms, they cannot cross a threshold level. They cannot, they are bound by their norms, and those prudent norms they cannot cross and go ahead and overexpose themselves to any particular group. In this case, perhaps Adani.
So, Mr. Gupta, what are the safeguards that are in place?
Hello. Yes, as other speakers, Mr. Dua and Mr. Sharma have said, see, LIC or any other state-run agency has a very, very elaborate investment decision mechanism. They decide. But unfortunately, very few people understand this investment the way LIC does. LIC doesn't do investment like me and you, which say that I have to pay my school fee, so I will invest it for 6 months or something like this. LIC has to manage liability which they take on the insurance of the policy of the investors, which matures in 20 years, 30 years, 40 years, 50 years. So they have a horizon like that. If you recall, 2-3 years back, all the public sector banks had made investment, and all the FPO was mainly subscribed by LIC, and everybody wrote that LIC is putting money in a sinking box and the LIC is sinking investors' money. But today, all those investments are 3 times, 4 times, and 5 times. So LIC doesn't invest for 6 months or something. And secondly, LIC can't be investing in a small company a big amount of money because that will be against the potential norms. If suppose a 1,000 market crore company is there and LIC invests 100 crore there, there'll be a lot of hue and cry, audit problems and everything, and even the IRDAI will come on them that you have broken the potential norm. So LIC is one agency which is following all the things. So probably you are asking this right question to the wrong people. You should have asked this question to all those politicians who are making this, that LIC डूब जाएगा, पैसा डूब गया, investor मर गया, कुछ नहीं है. Nothing wrong with LIC, nothing wrong with the investors' money in LIC. And secondly, I would say nothing wrong with the business of Adani. Market cap, I do not know. But as far as the business is concerned, all those business are utility business. They are infrastructure business. They are backed by real asset. Unlike Nirav Modi or everybody else, where you can't trace the diamond where the diamond is. But here, all the assets are there. And secondly, they are in the land. So you do not produce land anymore. So what land they would have bought 20 years back, which is shown in the books as 1 rupee, today it must be 100 rupee. And look at the capacity. Adani port is 25% of the port capacity of the country. Now tomorrow, no port can be closed down. You can't close down all that trade. International airport, Mumbai airport is 20% international traffic of the country. So all these things, and the power, they have got 13 gigawatt power plants. So all these things, not a ether which will evaporate in the air. The business is there. Only thing is this, suddenly somebody or something has hit them, but we got to understand the motivation of the person who has hit them. See, you have to see, I always say that credibility is proportional to absence of motivation. The moment there is presence of motivation, the credibility takes a hit.
In fact, sir, I am deliberately asking these questions only to you because if I was to ask them to the politicians, they would definitely say, "हाँ, सब कुछ डूब गया है." It's only the people who actually know the business and who have no inherent interest in spreading falsehoods who are going to put the facts out there. So then, would it be fair to say that a lot of this, when we are talking about stocks falling, shares falling, Mr. Dua, it is not so much a reflection on Adani's performance or their company's performance, but about the kind of panic mongering that is being done?
I would tend to go along with that school of thought for the simple reason that the market price of any stock, depends upon the intrinsic strength, which is what kind of company promoters they are, what kind of business they are, and what is the future for that business. So that's what I would call the real strength. Beyond that, it is perception, what people or the investors think would happen to that particular company, which drives the stocks up and down, the so-called volatility of the stocks. I think in this particular case, what is being played around with is the perception. A research report comes up with a particular point of view, then based on that, a financial institution of Switzerland takes a view saying that their deposits or their bonds are not worth investing in. That's a perception. But the fact is that does the investment made by LIC in any way, is it without a backup of real assets or the business which they are in, is it an incorrect one? On the face of it, I don't think that's true at all.
That's the golden word. That's the golden word, sir. That of perception.
Physical assets. Yes.
And which is why one wonders whether this perception is being deliberately created, and if yes, then why? My final question to you is, Ajay, it's also being said along with LIC that several public sector banks are losing money because of Adani. In fact, today we had a politician outside Parliament say that people in villages are being turned away from public sector banks, saying कि हमारे पास पैसा ही नहीं है. What is the truth of this?
Well, I think that's stretching the argument a little too far, because we did speak to India's largest public sector bank, which is State Bank of India, which has been for almost 6 to 8 quarters now, every sequential quarter have been reporting better profitability, best improving asset quality, all of that. And they told us that the entire process of underwriting for this particular loan has been on the back of cash generating assets. And not even a single time till now there has been any default in servicing of this debt. So these are valuable assets, cash generating, and the debt is being serviced so far. And also a point which you need to mention, which our finance secretary did mention about the entire public sector banking system now. The overall exposure of ESU banks to this particular group is very minuscule compared to the entire banking system. So risk management while giving out loans to corporate groups in the last 7, 8, 10 years have been very different and far more scrutinized and in much more better manner compared to in the past. So it is not possible for any public sector bank anymore to go ahead and overexpose their balance sheet to any group. And probably that's why SBI was so confidently telling us on national television that their exposure is backed by cash flows, is backed by good assets.
And the reason why we have actually got the experts to talk about this, because at the end of the day, if there is panic selling, if the businessman suffers, the real sufferers will be the investors. And they are not some multi-millionaires, billionaires. They'll be common people, they'll be poor people, they'll be people like you and I, who simply because of a perception, often devoid of facts, could end up harming their life savings. And that is the real crime. Thanks very much, all gentlemen, for joining me with your wisdom.